Well, the markets picture pretty volatile. We've seen the JSE dipping in and out of positive territory, now slightly lower on the day. We've, of course, seen disappointing data hit the markets overnight from the US. Are you expecting a pullback on the market scene? Have the markets run just too far?
I think that's what the general consensus is at the moment, is that, this rally that has happened over the past few weeks, a lot of people expecting, a pullback, key technical resistance levels not being able to be reached at the moment. But I think a lot of people just thinking, this market has gone too far, even though we are still in an upward trend. But, investors just pulling out at the moment, waiting for some other stimulus from maybe the economic news from the United States or company reportings to help, but nothing at the moment.
In the meantime, while there's this little direction being given in terms of company news or economic data, a focus has been diverted towards the dollar. We've seen a strong dollar, now a weaker dollar, and of course a lot of this affecting sentiment at the moment. Where do you see the dollar going in the short term?
I think it really depends on risk appetite at the moment, especially for South Africa in terms of how the rand will be affected. But what we're seeing now is, for 1 week, the flavor is to use gold as an alternative to paper-based currencies, and so we're seeing the dollar actually just oscillating around these levels, not really reaching $1.50 to the euro. And we're just seeing that there's not much pushing it at the moment, but all the weakness that we've seen lately, especially in the commodities, has been based on a stronger dollar, as people's risk appetite changes, and as lackluster performance from the United States in terms of economic recovery happens.
Looking at the local unit and what all of that movement has in turn spelt for the rand specifically, I mean, today we've seen it steadying against the dollar, but concern has been expressed over the recent past of the dire effects of a stronger rand on key sectors of the economy. We've got the SARB, though, emphasizing non-intervention and the need to actually acknowledge global imbalances. Do you see this being maintained, and new Governor Joel Marcus sticking to the clear policy towards non-intervention on the Forex front?
I think the market has welcomed Joel Marcus's stance at the moment to say, we'll take it easy. They are open to debates as to what their mandates will be going forward. But, the market did like the fact that they want just a currency determined by free market factors, and I think that was very welcome. And I think going forward, we know that our exporters are suffering, and they would prefer a weaker rand, perhaps above the 8 rands to $1 level. And and right now, I think also the key support level that people are thinking at the moment will be about 7 rands 30. So going forward, we will have to look and see as to what the dollar does. We are at the mercy of the dollar as being an emerging market, and just going forward, it's very important to see where risk appetite falls and what also the gold price does.
Well, being an emerging market, we are under the dollar, but also being a resources-based economy as well. Just looking at the resources sector today, we saw it trying to buoy the market, edging into positive territory. It seems to be dipping back right now. How are you playing the resources space right now? It's also still very dependent on the dollar. I think all these things are so interlinked. It's difficult to separate one from the other. But depending also, as I said earlier, on what the risk appetite is for gold and the dollar, and that will determine whether people are going to apply into gold as an alternative or as an inflation hedge. And going forward, we've seen that oil has picked up a little bit, and now trading at about $77, but also has come back from its previous highs. The gold price also going up quite a bit, but not reaching that 1,150 key short-term resistance level. But we will see, and that will be only determined by risk factors. Just looking at the fact that things are so tentative at this stage, I mean, where are the opportunities to be found at this stage of the game? Personally, I believe that defensive stocks are the way to go at the moment. While nobody's sure which way the market is going to go and whether this pullback will be sustained, defensive stocks such as your MTN, perhaps Vodacom, BTI, which is British American Tobacco, SAB, those are the kind of stocks that people will be looking for, should be looking into, because even if they do also pull back a little bit, they'll be less so than the forerunners that we've seen in this rally market, in this rally climate. And I think there's still a lot of value to be had in those stocks. So a defensive play, I think right now should be followed.
Ntombenhle, on the local front, we did see numbers out of Avusa this morning reporting that headline earnings per share plunged 60% back, back 39 cents, and they've attributed it to a loss in a drop in advertising revenue and consumer spend as well. What has the market made of those numbers?
Yeah, I think it was it was expected to, 20% lost in their ad spend. I mean, that's quite a lot. And they are a local media play, and they are very dependent on what happens in the local market, in their local economic environment. And we are going through a recession, so we're seeing that climate being translated into their results. And consumer spending is down. Their media business is not doing well, and companies, the first thing that they cut is advertising. So we have seen that translating now to Avusa.
That opposed to a company like Naspers, which has a bit more of an extended reach outside of the local environment. How do the two compare if we have to do a comparative analysis there?
You almost can't really compare the two. Naspers and Avusa, they're operating in different markets. I mean, they've got Naspers is an international play, with the presence in emerging markets such as Brazil, Russia, and the Eastern European bloc. And also, Naspers has got Tencent, which is the Chinese international internet company, and that has contributed quite a lot to their standing and to their bottom line. I think they've got a 35% stake in there, and that has translated a lot in the sense that we saw with the Tencent results earlier on in the month that the Chinese internet during the summer holidays, the revenues there went up quite a lot. So we're looking at almost different players there, whereas emerging markets and growth factors such as from multi-choice also at Naspers would make a huge difference to how the two media companies perform.